How is the market in May 2022 in San Diego? Let's get into it. The combined median home sales price is up to $875,000, which is up just under 21% year over year. And a really important milestone that detached single-family homes just hit is that the median price is now $1 million. The list price to close price ratio is up to 107.1%. So if you go back 3 months, it was 105.3%. 106.7%, and now it's at 107.1% of the original list price. So that means the winning offers on average are 7.1% over asking price. Days on market is still 18. Month supply of inventory is at about 24 days, which actually ticked up slightly, which per the season is usually good. This is the time of year when a little bit more inventory starts to come on the market. But as of today, we are still down about 18.4% year over year from the number of active listings that were on the market this time last year. So still critically low inventory. Some of the other data points that I think are important to realize, look at, and consider are what are considered leading indicators and what are considered lagging indicators. So leading indicators are things like listing price. What did they start advertising at? Number of new homes hitting the market. These are leading indicators. Number of pending sales. Those are, again, leading indicators. Lagging indicators are things like what did a home close at? How many of those pending contracts actually closed? Mortgage applications, the amount of open mortgage applications to the amount of closed mortgage applications. This can give you a sense if there's rapid upward movement, activity, qualified buyers coming into the market, and available homes for them to choose from. But when you look at the lagging indicators as well, that tells you what's actually closing and the business that's actually happening, which is also really important to see because you can see these things start to compress over time, and that's the data that you really need to pay attention to be acting on in the current market. What happens is it normally takes about 2 to 3 months for these trends to sort of crystallize so that you can see and notice that there's a trend happening where things might compress a little bit. And then consumers tend to act on that data or hear about it from mainstream media about 2 to 3 months after that 2 to 3 month trend establishes itself. So that means the average consumer is kind of looking back about 6 months and acting on that data and that advice or thinking that that's the market that they're in, which it's really important to work with someone who can pull the data on a daily basis, hint, that's me, and tell you what's going on right now. Buyers as well will be acting on data that they've seen in the news and stuff that's really trailing about 3 to 4 months behind. So we might know that there's data happening right now that we need to act and price accordingly on so we don't jump too far of a market that's starting to have a little bit of cooling in it. But it's just stuff that you really, really have to think about, and that's where a local professional really makes a big difference for you. Interest rates have also cleared above the 5% mark, so we'll see how long they stay there for, what kind of activity happens with inflation. It's starting to hopefully kind of pump the brakes on some of that stuff. But you'll see that the buyer demand has actually cooled and certain buyers are actually being edged out of the market because the interest rate has gotten so high in tandem with home prices being so high they can no longer afford monthly payments on certain homes. So that is reflecting that there is some buyer cooling. And so what's going to be really interesting is to see, right now what we have is aggregated April data. So what I'm giving you now in May is actually the data that came up through all the way through April 30th. What's going to be really interesting is to see May data that we won't get until the first week of June, and then June data, which we won't get until the first week of July. By the time I'm giving you this report in July, it'll be really interesting to see what happens because I really think we're going to see a compression in a lot of these figures in terms of the list to sold price ratio, the median home price increase kind of compressing and slowing a little bit, and just the overall buyer activity, again, just compressing overall. Really important to realize that market cooling does not equal an impending crash. I know there's a lot of talk about a recession and all these things that are coming up in the headlines. Again, those are kind of fear clickbait headlines that grab your attention. But if the market cools a little bit, it's not a bad thing. But there's no data or no indicators leading or lagging that could bring us to the assumption that there is a pending market crash. So again, a broader economic recession can happen, a stock market crash or recession can happen. These things can all happen and it doesn't necessarily lead to a housing crash. In fact, if historically you look at the last 6 recessions, housing only declined out of 2 of them. One was the early 90s when it only declined about 2%. The other one that we just really remember and really kind of sticks in our mind is the 2009 crash where it dropped about 18 to 20% depending on. So every other recession that we've had historically for about the last 5 or 6 that there's really good data on, housing actually accelerated out of those. And if we remember even back to the end of 2020 and early 2021, which technically could be considered a pandemic-induced recession, housing accelerated extremely fast out of that as well. So what I think we'll see is a bit of a cooling in the market as we move through summer into fall, just because price affordability and wage growth is kind of hitting a stall point. But it doesn't mean that the market's going to crash. It means there might be just a plateau, a leveling, and just slight gradual increase based on there is still a lot of backed up demand and there is still very low supply. But I think that's just going to mean it's more of a normalized market, and I think we're going to start to see a little bit more days on market, a little bit more of that month supply of inventory creep up, and maybe give buyers just a little bit of breathing room. And sellers, just making sure that you're really taking care of your homes, make sure you're positioning them well, and make sure you're pricing them smartly and not too aggressive. If you have any questions, I'd love to talk to you guys. Reach out. Pat O'Connor with Market Real Estate. Thank you.